Hey everyone, what's going on? It's Cody. Welcome back to the channel and welcome back to another video talking about Salt Lake City real estate and what's happening here with real estate across the Wasatch Front. Now we're going to cover a ton of information in this video. We're going to talk about what's happened over the last couple months as well as what's happening in the future. We've got a ton to talk about here with interest rates, with the presidential election, with unemployment, with jobs. We're going to talk about a lot of information here in this video. So if you enjoy these videos, make sure to reach out to me. I want to be your trusted real estate resource of choice. I love helping people. In fact, we just crossed over 1,000 people who've reached out from these videos just like this. A couple weeks ago, we hit over 1,000 people, which is kind of mind-blowing. In the last couple of years, I had never expected this to absolutely blow up. Of course, there was a lot of people relocating with COVID and just the changes that are happening in the world, a lot of people working remote, but that relocation continues to happen. So if you're in that position, whether you're looking to buy, sell, or invest in real estate, please reach out to me, call, text, or email me anytime. I love hearing from you guys. My information is here on the screen. Let's have a chat about the type of home and lifestyle that you're looking to have when you make your move here to Utah, or if you've got a property to sell or you want to invest in real estate, I help with that as well. I'm a real estate investor myself and love helping investors too. So with that said, let's jump into my screen here. We're going to talk about what's happened in the market over the last couple of months. Then in a couple minutes, we'll talk about what's going to happen in the next couple of months. I'm going to give you some projections as well as some different things to look out for here in the next couple of months. So that being said, we're going to take a look at interest rates here first. I want to actually start by going back roughly 1 year to see where interest rates were. Back here in September of 2023, we were sitting at about 7.25% on interest rates, and we climbed all the way to about just over 8% here on October 19th. So October 19th, 8%. We saw a really big fall off here going into December down to 6.6, back up to 7.5. Now we're down back to about 6.5%, maybe just under that a little bit. And this is pretty typical to see when interest rates are fluctuating. There's been a lot of uncertainty in the market. People are not sure what's going to happen. Even though the Fed funds rate has not changed for a number of months now, we have seen interest rates come down just because there's more confidence in the market. There's more confidence in the stock market, the economy with jobs and unemployment. Things are looking bright when it comes to that, and that's actually what's driving these interest rates down. Now, there is talk that the Fed could actually lower their Fed funds rate here in the next little bit, maybe by 0.25% or 0.5%. 0.5% would be pretty drastic. I personally don't think that will happen. I could see 0.25% coming just to kind of tame some of the drop off in jobs that we've seen, as well as just kind of the economic growth that the Fed is looking at. Inflation has fortunately come down under control a little bit here in the last couple of months, and we're sitting pretty close to what that Fed targets on their inflation rate. I still personally think inflation needs to come way down. I'm sure a lot of people feel the same about that as well. It just seems like so many things have gotten expensive, especially for me in my real estate business. I'm always looking at what contractors are paying, what materials are actually costing out there in the market. And a lot of these things just went absolutely crazy over the last couple of years with COVID, with shortages, with unemployment, with all these different changes that happened in the last few years. We saw these prices go all the way up, and now they really haven't come back down. So I'm hopeful that that could actually happen. I don't expect that we'll see prices drop by substantial amount or deflation or anything like that, but it would be nice to see a little bit of a reprieve, especially when it comes to labor in the construction world as well as materials. So looking at the market as a whole, here's what we've got. August 2024, we saw 2,424 home sales. I should mention really quick that the criteria that I've used here is just Davis, Weber, Salt Lake, and Utah counties. So this basically encompasses everything on the Wasatch Front. It does not include the Tooele County area or Summit and Wasatch counties, which is where like Park City, Heber, Camas, Oakley, where those cities are at. So we're just looking at the Wasatch Front. In August 2024, last month, we had 2,424 home sales, down just slightly from July at 2,533. Now, it's interesting that July was actually up because July is typically more of a down month because we've got two holidays here in Utah. We've got the 4th of July, and then we have the 24th of July, which is a state holiday. So typically July, people are traveling, they're going out and they're doing things, they're spending time with family, and there's less home sales that actually happen during this time. July 2022, you can see this pretty substantially here. We had 3,200 home sales, then 2,500, then back to 3,000. So July is usually quite a bit of a down month. Same thing here, 2,600, 2,400, 2,600. So 200 less home sales in July. That means, that's over 5 homes a day, which is pretty substantial. It adds up. Here in July, of 2024, we were actually 2533, which is up from what we saw in June and also up from what we had in August. August was 2400 compared to last year at 2600. So home sales are down just slightly. Of course, volume is down a little bit on that as well. However, the important thing to look at here is the median original list price to see what's really happening to prices year over year or month over month. So going back again, looking at August 2023, we had a median original listing price of $515,000 with sales prices of just under $500,000. It's always kind of interesting. These always come out to just such round numbers, right? 499, 990. Of course, they do round it, generally probably to the closest 10, but it is interesting that they're all, within, well, I guess this one's not, but, they're all rounded pretty close. Which is interesting to see. This one, not so much, but it is, something to kind of note there. I don't know what's up with the data, but anyway, sorry, just something I just kind of noticed and, never really realized before. So this one here, $515,000 for the median original list price versus a sales price of $500,000. August of this year, we had a median list price of $523,000. So we're up about, $8,000 on that. And our sales prices are up the same amount actually. We're up about $8,000 on median sales price. So people were negotiating a little bit harder. We actually saw this median sales price to original list price ratio drop the last couple months, especially during the spring and summer. We were at 99% and we fell to 98%, then down to 97%. I expect that we'll probably stay around this 97, 98% here in the next couple of months. I do think there's going to be some changes. We'll talk about that here in just a second. The last thing I want to mention is the median days on market, which is, includes June here at 23, July at 28, and then August at 32. So we are starting to see that number kind of climb up. Again, that's just the seasonal shift. Kids are back in school. People are kind of calming down for the year, and there's less people out there looking to move during this time. All right, so we're going to narrow this down a little bit. We're going to take a look at home sales here between 500,000 and 1 million. So this is going to be kind of the median, a little bit higher than the median list price, but a range that a lot of people who watch these videos are looking at. June, we had 1,119 home sales in this criteria. July was roughly the same, up just slightly, and August was roughly down just a little bit as well. Median list price has not changed that much. We were about $650 over the last couple months, with median sales prices just below that. Again, 97, 98, 97%. This is all pretty typical. So if you're shopping for a home in the $650, $700, $800, $900,000 range, you should be able to expect to negotiate roughly 2 to 3% off of that list price on that particular home. Now, that doesn't mean that every single home is going for that. Some are going to be negotiated down 5 or 10%. Others are going to sell at the asking price or even above the asking price. So lots of things to consider there. We do see quite a bit of a fluctuation there. Days on market, again, climbing just slightly, but not really anything to be concerned about. Now, taking a look at the luxury market, again, we're seeing a lot of the same information here. I've now narrowed down the list, the criteria here for homes between $1 million and $3 million. This seems to be kind of the bulk of where the luxury market is. Once you go over $3 million, you really kind of start getting into one-off properties that could just have, crazy data, which might sell for a lot, might sell for a little. They might be listed at 8 million and all of a sudden they drop down to 6 million. We could see some big skews in the data if we search that high. So we're just going to keep it between $1 and $3 million for this data set. Again, we saw the number of home sales decrease over the last couple of months in this price range. Not surprising given what's happening out there in the market. However, we did actually see the median sales price increase by a pretty substantial chunk, as well as the median listing price. Now, this is probably due to just a couple more, maybe 5 or 10 or 15 extra homes who were listed at a higher price that ended up selling during that time. So we actually saw the median list price climb from 1.3 million to 1.4 million, with sales prices climbing from 1.25 to 1.3, which actually represents a decrease in the sales to list price ratio, even though sales price data went up. So this is kind of confusing. Hopefully I'm not confusing you guys. If I am, the important thing to remember is that you need a real estate agent on your side. Hopefully that's me. I'm hopefully your favorite Utah realtor. I love hearing from you guys. Please reach out, call, text, or email me anytime. If I can help you in any way, my information is here on the screen. I love hearing from you guys and would love to help you along in that journey, kind of explain these different things to you. I'm in the business every single day. I'm out there in the field, seeing what's happening with homes, seeing what's happening with buyers and sellers and investors, and getting a really good feel for what's happening in the market. And I feel like I'm well positioned to be able to help you along in that journey. So with that said, please reach out if I can be of assistance in any way. Now, that being said, I also want to talk about what's happening here in the next couple of months. Looking back at what happened in August or July or June, of course, is very important, but it doesn't encompass everything that's happening, right? That's past information. That's what's already happened. We want to actually take a look at what's coming, right? If you're a buyer or you're a seller in this market, you probably want to know what's going to happen this month, next month, 3 months down the road. Well, let's talk about a couple things. So a couple topics here. We've got the presidential election coming up. No matter who wins, whether it's one side or the other side, I personally don't think that much is going to change with that. However, there's a lot of people who think there's going to be some massive change, and there's a lot of people who are deciding to sit on the sidelines during this time just to kind of get through the uncertainty. There's always a lot of uncertainty leading up to any type of election, and so there's a lot of people who are going to decide to sit on the sidelines and wait for that to pass before making a decision to whether to buy a home or to sell a home or invest in real estate or whatever. So that's number one, presidential election. Number two, we are actually expecting a change in interest rates. Like I mentioned earlier before in the video, the Fed is expected to decrease to lower interest rates on their Fed funds rate here by about 1/4%, maybe up to 0.5%. I don't think 0.5% will happen, but maybe 1/4% could be likely here in the next couple of weeks. And if that does happen, we could see interest rates fall on mortgages by about the same amount. I do expect that, in my opinion, interest rates are going to be roughly where they're at for the next foreseeable future, right? I think that they're probably going to hover in the low 6%, high 5% range for at least the next 6 to 12 months. I think that that's probably pretty realistic. If we do see a substantial drop in interest rates, we could get back to a period where we could see interest rates fall down to low 5%, maybe high 4% range. But personally, again, I don't ever see it really going back beyond that unless there's another crazy world event. So interest rates may come down just a little bit, but we don't know if that's going to happen just yet. So if you're a buyer in this market, you may want to wait just a couple weeks and kind of see what's happening. It may still be a good time to buy. 1/4% or 1/8% on your interest rate is not going to make a huge difference. So if it makes sense for you to buy right now, just based on your job or your family or your own personal situation, then go ahead and do that. If it makes sense for you to wait, go ahead and do that, right? It really depends. You kind of have to weigh all these factors together. Now, there's two other things that I want to talk about here. Again, not real estate related, but they do affect the real estate market. Number one, the stock market is doing extremely well. The stock market is at close to all-time highs, right? It's come back a little bit in the last couple of days or weeks, but the stock market is doing very, very well, which is giving a lot of confidence to people who have retirement funds, who have investment funds, who are invested in the real estate market. So especially at these higher price points, especially in the luxury market, we are seeing more confidence. We're seeing more strength in this particular market because of what's happening in the stock market. So that's something to watch. Number one, if the stock market really starts to lag or to suffer, we could see that affect the real estate market as well. Number two, the other thing I want to talk about here that's related to the economy is jobs and unemployment. Unemployment here in Utah specifically is still extremely low. We're still seeing very, very low numbers. In fact, I know that we're in the top 10 for lowest unemployment rates in the country. Unemployment is very, very low, which means that people still have their jobs, they're still making money, and they're still making their mortgage payment, which means that there's not a lot of new listings coming onto the market, which means that the market is going to stay roughly where it's at. So if jobs and unemployment stay in a strong position, I do not expect a major downward shift in prices. In fact, I could actually see prices go up if interest rates come down, right? If interest rates come down, people can now afford a little bit more, and people are going to move up the price that they're looking at, which then causes more competition at these higher numbers and pushes prices even further. So, man, we covered a lot of information here, guys. If you're still watching this video, thank you so much. Please reach out to me. I want to be your trusted real estate resource of choice when it comes to buying, selling, or investing in real estate here in Utah. Please reach out to me. Call, text, or email me anytime. My information is here on the screen. And with that said, guys, we'll catch you in the next one.